Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics of the day and the biggest moves in the stock market. It is presented with comedic common sense and just the right amount of sarcasm by an expert in financial literacy. And hey, that's me, Larry Steinhouse. Today is Thursday, October 20th, and I want to welcome you to the show. We are here live on Facebook, Twitter, LinkedIn, and YouTube. And of course, you can also find repeats of the show on Rumble and Spotify. Please search Money Chat Now and Larry Steinhouse, and then you can follow me there as well. Hey, if you'd like to connect to me directly, please go to contactlarry.com. That's contactlarry.com, and there you will find my social media connections, my email, and my text message information, contactlarry.com. Hey, just a reminder, if you're watching online, hit that like button. Come on, everybody, hit that like button right now. If you're watching on YouTube, hit the like button. If you're watching on Facebook or LinkedIn or Twitter, hit the like button. Also, hit that share button. So if you're watching on Facebook, hit that share button. Hey, don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. And of course, you can also find Money Chat Now and the Larry Steinhouse Show on Spotify. By the way, the difference between Money Chat Now and the Larry Steinhouse Show is on Money Chat Now will have the breakout sessions on Spotify, and the Larry Steinhouse Show will have the interviews on Spotify. That's the difference. You can also comment live during the show on YouTube, Facebook, LinkedIn, and Twitter. And please say hi so I know you're watching. A couple people saying hi already. Real quick, it looks like we have James coming in from YouTube, Jose, one of my top fans. We got Tommy coming in and saying hi. Hey, thanks, Tommy. I appreciate you sharing it. All right. Okay, also, don't forget to join the Money Chat Now fan page on Facebook, because if you do that, you can still watch the show when I'm in Facebook jail. I've been behaving lately, and it's funny because I start typing something, and I have to stop typing it, going, oh, I'm just going to be put in Facebook jail. Why even bother? So, it's just so annoying. Anyway, on today's show, we're going to be talking about the market recap yesterday. We're going to be talking about self-driving rideshare. We're going to be talking about home builder sentiment and student loan forgiveness update. It's interesting stuff. Oh, by the way, there's my wife. I love you, Linda. All right, Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class this Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. Hey, do you know how to share this program? Underneath the video, there's a share button. So go to the right, you hit the share button, then press the share button and choose from Share Now. So you choose Share Now from the drop-down. Thanks again. I see Betsy and Peter and others who shared it. I truly appreciate it, and I bet your friends find us as enjoyable as you do. Let's talk about yesterday. Well, it looks like the market rally kind of fizzled out yesterday. The best performing stock, of course, was Netflix after the earnings came in strong on Tuesday. The big news of the stock was that he added over 2 million subscribers. Wow. The stock finished up over 31% to about 272. The biggest loser in the market was a surprise to me. It was Generac. The home generator and energy storage company dropped 25% yesterday when they warned their earnings would be lower than expected. So Generac was a big winner in the world, when the world thought the sky was falling during the pandemic. Preppers like myself were installing generators in case the world came to an end and electricity was shut off at the grid. Kind of like why I have enough ammo for a small army. Anyway, add to that all of the excess income for the country, generators were no longer out of reach for the average public. So the company, like many others, crushed expectations in the past years, and like many of the other companies, business is slowing. So basically, they're just letting investors know this, and the stock plummeted. Like I had mentioned several times in my classes and on the show that I felt all stocks would return to 2019 prices and then kind of cycle in the range of that time. And this is just another example of that. The last time this stock was this low was 2020, and it grew as high as 525 in August. That's a crazy decline of 75% in 2 months. However, if my theory holds, the stock will be in the 50s in a few months. So speaking of going back to 2019 theory, there are 2 stocks that are glaring violations of this theory. So you might want to write these down. The first one is Apple. If my theory holds here, the stock is way overpriced at 143, and in 2019, the stock would have been trading at about 47. Yikes. That means Apple has a really far way to go down. Here's the next glaring violator of the theory, which is Tesla. So Tesla yesterday actually had an earnings report that was kind of mediocre. Tesla reported earnings of $1.05 a share. Wall Street had expectations of 99 cents a share, but their revenue came in at $21.45 billion, missing the $21.96 billion expected. I never understand. It's not that far, really, but it's still not bad earnings at all. But let's go back to 2019 theory and look at what it was trading at. At today's trading number of 214, That would include, by the way, two splits between 2019 and now. The adjusted price would now be between 38 and 40 if we go to 2019 theory. Now, the stock is also currently trading at 44 times earnings. At the price of about 40, the stock would pretty much, be right around a multiple of about 10, which would be normal. Here's another thing. You guys want to put play? Get puts on Tesla now. Not only because of what I just said, but here's what's going to go on in the next 2 weeks. In the next 2 weeks, Elon Musk is going to sell shares of Tesla to buy Twitter. And when he does that, that stock's going to plummet 50 points. Anyway, that's just a speculation play, but that's a speculation play I think will do really well. Frankly, by the way, the fact that Ford is currently selling for 6.5 times earnings and the stock sells for $12, logically Ford is a little low and Tesla's about 4 times too high for me anyway. Speaking of Tesla, it's now 9 days, as I said, till Elon has his deadline of buying Twitter, or the lawsuit continues with him having no chance of winning the lawsuit. So he's buying that, and he's going to need the money. By the way, Twitter is currently selling for 127 times earnings, and in 2019 the stock was selling for about 30. So it's now 51. It's selling for about 30. So I don't know, man. I don't know if I think he's getting robbed on that one. Meta, on the other hand, looks like a winner to me when you use the theory. Meta is right at the 2019 low. This signals to me that Meta will move up to 2019 range of a high of about 180. 160 would be a safe bet. The stock is currently selling for 133, which is only 14 times earnings. If the earnings report is really bad, it could drive the stock lower, but the only thing that would make the stock go bad is, Zuckerberg's obsession with the metaverse. This could kill the stock temporarily. Meta's earnings are next week, and I'm waiting with bated breath. I think it's going to be pretty good. I really need 140 before earnings so I can get out of a play at a small profit. Lastly, Alcoa had a surprise bad earnings report when revenue dropped about 8%. The stock is only 7%. It fell only 7%, but it's currently trading at 35. I'm looking forward to seeing my theory holds on all these plays. Let's look at the futures. Let's see what it has in store for us. And right now we're at 30,000, which gives the futures up 117. The S&P is up 5, and the Nasdaq is down 10. Now I've been looking at the futures all morning. They were down about 100 points earlier, so they've been coming up a lot. The Nasdaq was also down further. Then it came up. It was positive for a little while, so now it's just down. All right, let's talk about self-driving ride sharing. Hey, we know it's coming, right? Soon we will have all the self-driving cars taking us from place to place. You will order your car via an app on your phone, such as Uber or Lyft, and in a few minutes a car will arrive at your door without a driver. You will get in and out, and your favorite music will be playing, and when you reach your destination, a soft voice of your choosing, male, female, or something else, will remind you to take your belongings and to have a nice day. At that point, owning a car will become unnecessary, and shortly after, all cars will be autonomous. Well, this has been growing in several test areas, and now Waymo, a company owned by Alphabet, formerly known as Google, is going to test its self-driving rideshare service in Los Angeles. Waymo currently only operates the service to the public in East Valley region of Phoenix. The set for this self-driving system requires mapping data, and they have already started driving around the city collecting that data. That process involves human driving cars down streets while sensors gather information on crosswalks, road edges, curb heights, and intersections. Waymo said the service will first begin with safety drivers behind the wheel and later with just Waymo employees as riders. It will begin public testing after it gathers permits and feedback. The company declined to provide even a rough timeline of when it expects these milestones to happen, but the self-driving car industry has also been slow to progress. To me, it's a no-brainer. These self-driving cars are the obvious evolution of transportation. My favorite movie example of this was in the movie Total Recall when Arnold Schwarzenegger got into the Johnny cab with the robot driver. I love that. That was the best. I wonder if they'll eventually have autonomous drivers or mock drivers in the car. One of the best things about an Uber or a Lyft are the conversations with the drivers. You learn a lot about the person, and the time passes by quickly when you're chatting with the driver. By the way, I still think Uber is a massive play in this arena. It will be a long-term buy and hold stock, but I see it clearly as the Netflix of rideshare. Remember a long time ago, Netflix would send you DVDs and you had to send them back? Now it's all streaming. Tesla and Hertz will also have a future in this model. I would assume that it'll be a subscription model based on usage instead of paying per ride. It'll probably be a monthly fee with a different tiers based on expected usage. I also guess our grandchildren's kids may never know the joy of driving a car. Oh well, what are you going to do? I'm going to keep a car for always. All right, let's take a break here, and I'll see you guys in a minute.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock option sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse, and if you'd like more information on investor schooling, of course, you can go to investorschooling.com or call 866-424-2829, 866-424-2829. I'm telling you right now, you want to come tonight. We're going to be doing a special on, we're going to be presenting to you the worst landlord. Seriously, the worst landlord will be telling you his stories. So come there and see it, because if you want to invest in properties, you're going to learn all the things not to do by listening to the worst landlord. All right, we're also live here on Facebook, Twitter, LinkedIn, and YouTube, and you can also find repeats of the show on Rumble and Spotify. Please search Money Chat Now and Larry Steinhouse on Spotify. Like I said before, like and subscribe there. And if you'd like to connect to me personally, go to contactlarry.com. That's contactlarry.com, and there you will find my social media connections, my email, and my text message information, contactlarry.com. All right, a couple people coming online. Actually, I see that one of my favorite Uber drivers or Lyft drivers, I'm not sure which he is on there. Let's say hello to Bill and Tom and Rob and Joe and Michael and James and Mark and Ken and Deb. Oh boy, thanks so much, guys. I totally appreciate you guys. Hit the share button. Everybody grab your share button next to the thing below the video and share it on your page. All right, so far, of course, we've been discussing the market recap. Just to give you a quick update, the futures are up 105, the S&P is up 3, and the NASDAQ is still down about 14, but not bad, not bad. We talked about self-driving cars, and I think they're going to be all over the place. Coming up, we got home builder sentiment and student loan forgiveness, and of course today's picks and plays. But did you guys hit that like button, hit the share button, hit the like button? Leave me a comment to say hi if you haven't already. So if you're a first-time watcher, just say hi so I know you're watching. Please share and like as well. And also, hey, don't forget to order my new book. It's called Money Hacks, and if you ordered it, please leave a review on Amazon. So if you ordered this book and you read it, even if you didn't read it, I don't care, but I'd prefer if you read it. Leave a review on Amazon. I noticed that the reviews are slowing down. So anybody who's watching right now who has not left a review, please leave a review. Hey, Linda, did you leave a review? Anyway, let's talk about home builder sentiment. So the housing market is really starting to sink, and now the home builder sentiment numbers have dropped even more. So the home builder sentiment is basically a survey given to home builders regarding their thoughts on how the sales of new homes are progressing. It tracks the confidence of whether a new home development will sell quickly or slowly. So the home builder sentiment is on a scale of 1 to 100, and anything below 50 is considered a serious problem. Well, last month, the home builder sentiment came in at its lowest level since 2012. 2012 was the peak or the absolute bottom of the housing market. Anyway, the number was 38. Yikes. So home builders are struggling. They're struggling with this market and interest rates at 7.5%. And that's a big problem. That's a far cry from the 3 or 3.5% interest rate in December. By the way, the home builder sentiment was in the 90s about a year ago. Even previously home resales of sales are staying on the market longer. Look, it's here, folks. The housing recession is clearly here, and it's going to get worse, and a lot worse before it gets better. Like in 2008 through 10, we will see home builders go out of business, and they will struggle to sell houses they already have planned to build. You know, in the 2008 to 2010 era, we saw a lot of prominent builders go bust and never recover. We saw the stocks of these companies, the ones that survived, plummet as well. Looking at the chart for Toll Brothers, I see that we're at the 2019 price right now of about 40. The problem is that the price of the stock in 2008 to 2014 traded at about 20. This is kind of where I believe the stock's going to be headed. But if it drops there too fast, it'll go into the single digits for about a year or two. Lennar is also currently, now check this one out, because if you want to have a put play, here's one. Lennar is currently selling at 72 and has not come down to the 2019 price of 45. This is definitely a short play because the 2008 to 2013 price was also about 20, and right now it's 72. From 70 to 20 is a really long way to go. I see it as just the beginning of the housing recession. It's even possible that rents will start to creep down as well. I'm personally prepared for all of this. I refinanced all of my houses, or most of my houses, I should say, at lower rates, or took over mortgages at low rates, so I'm fine. I think the highest rate I'm paying right now is 7. I have my rent increases up to date, and I'm waiting to buy more homes. But the transition period from here to the bottom will be painful for many real estate investors, many real estate agents, mortgage brokers, and other people involved in home sales and home building. I'm going to say it again, Jerome Powell needs to slow down here. He moved the internet rate up way too fast, and he fell asleep at the switch for the past 8 years, and now the American public will have to pay for his mistake. I really hope he's listening to the people who are telling him this. It's rough when you realize that the people who make decisions for your life and your finances have so much wealth that they never experience what the average person experiences by their decisions. Well, it is what it is, but if you plan to buy a house soon, expect prices to come down. This spring is going to be a shock to many who wanted to sell their houses, but the spring of 2024 is going to be maddening to many. The issue will be whether we have enough buyers who will qualify for their loans. Many buyers will experience lows in savings accounts, lower incomes, or no income at all, and this will make the pool of buyers less than the pool of sellers, something we haven't seen in a while. This will also last about 5 years before it begins to turn around. Here's where the brave stick it out. If you have real estate, just hold on to it for the next 7 years, and you will be really happy. And the more real estate you have, the better your financial situation will be. And if you dare short the home builders, my guess is that's why the stocks are still high, believe it or not, is because people are shorting them and they're driving the price up. If I can find another countrywide bank scenario, I would short that too. Synchrony Bank is on my radar. Did you notice that? How many Synchrony bank cards you have now? They have everything from PayPal to Lowe's to Amazon. This means when the real recession kicks in about 9 months from now, people will start to default on their loan payments. If one bank, Synchrony Bank, has many loans as they do, bad things will happen in earnings reports and the stocks will fall rapidly. Also, get as many credit cards as you can right now. You don't have to use them, but right now credit card companies are struggling to make their books look good with credit card holders on file. In about a year, the credit card companies will be pulled back, and many may even lower your credit limits. Don't get stuck with low limits because you didn't prepare. I notice more and more offers are coming to me, and I notice more and more cards are being approved to me faster. Take advantage of the time and take advantage of this knowledge, and come see me in Investor Schooling. I'm going to teach you how to do it. All right, real quick, let's get into student loan forgiveness. So here's an update on the illegal student loan forgiveness program that Biden introduced. By the way, you want to know why it's illegal? Well, Biden abused his power with the COVID Emergency Act to issue the dictatorship-type offering. Normally, this would have been voted on in Congress, but, the Democrat Party has learned over the past 3 years that the Constitution can be bypassed with the COVID emergency powers. Oh, by the way, did you know that the COVID emergency powers have once again been extended to January 11, 2023? Yep, I hear you screaming at the screen saying, but didn't Biden declare COVID was over? Well, clearly, the people he didn't run this by his handlers, and the people the people who handle him didn't know, and they're really upset about it. So they decided to extend the COVID emergency powers. But getting back to student loan forgiveness, the applications went live over the weekend, and more than 8 million people applied for student loan forgiveness. The website was spotty at first, but it certainly wasn't like the disaster that Obamacare was many years ago. Many more people are applying. However, there's a group of people who are taking this illegal mandate to court to try to stop it. So the lawsuit to stop it hasn't had much traction, and it's been denied. However, now the rest of the decision is up to the Supreme Court. The request by the Brown County Taxpayers Association in Wisconsin was directed to Justice Amy Coney Barrett, who is responsible for handling emergency application requests from the 7th Circuit U.S. Court of Appeals. Well, a federal judge in Wisconsin earlier this month dismissed the Taxpayers Association lawsuit challenging the program, ruling that the group did not have legal standing to block the plan. All right, so let me explain this to you. In order to block the student loan forgiveness, the plaintiffs need to show that this will cause harm to them. They're basing their case on a possible tax increase to the citizens that they feel will pay for the student loans. In other words, the student loans aren't being forgiven, the loans are being transferred to the taxpayer. The problem with this argument is the burden of proof. Nowhere in the plan does it say that the government will be raising taxes to cover the loan. In fact, nowhere in the plan does it say where the money's actually coming from. And maybe it's just a wash. Well, the plaintiffs are doing all they can to stop the plan to forgive the loans, but from what I'm reading, even the most conservative judge can't rule in their favor on the grounds of the lawsuit filed. Look, I'm surprised that no one has filed a lawsuit on the grounds that his abuse of power. That would make more sense to me. But hey, I'm just a guy sitting here in Pennsylvania with a cheesy morning show on the internet. What do I know? So I'm sure the forgiveness will happen, and like I said in the past, the real problem is the predatory nature of which these loans are issued. You know, it's like putting a gun to an 18-year-old's head going, sign here or your life will suck. Sign it now, sign it. All right, let's take a break here, and after this break, we'll have some picks and plays for today. Hi, I'm Larry Steinhouse, and one of the most misunderstood things in America is money. That's why I've written this book. It's called Money Hacks, because everything you think you know about money is wrong. And I'm telling you, everything you think you know about money is wrong. When you read this book, you will learn things about money that you did not know. You will even learn if money can buy you happiness. I have a full chapter dedicated to that. You're going to definitely want to read that. I talk about how to use other people's money to buy real estate. I talk about how to save more money, and I even talk about how to rebuild your credit score in this book. There are 22 amazing chapters in this book. This book is now available everywhere. It's available on Amazon. It's available on barnesandnoble.com. And you can order this book right now, and you'll have it in 2 days, and you'll start learning things about money that you never knew before. So order the book right now. Go to Amazon, go to barnesandnoble.com, and order the book, Money Hacks by Larry Steinhouse. All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like to be a sponsor on this show, come on, be a sponsor on this show. Your name and product will be delivered to hundreds of loyal listeners. Actually, I was talking to a possible sponsor last night, which is a big bank that I often tell you guys about, and I'll let you know if that comes true. Anyway, as you know, we're expanding our base every day, and if you'd like to get your product or service out to my audience and help keep the show in the air, I'd love to have you as a sponsor. Just reach out on Messenger or contact me at contactlarry.com. And by the way, don't forget to go to the Spotify channel, and don't forget to subscribe to the channel, and you can listen to all the reports. If you want to break that last report out, you can, and you can actually listen to it one at a time in your car. Look up Money Chat Now on Spotify and subscribe. So I have to tell you, I'm looking up, and I'm laughing hysterically during the commercial, because Tommy writes, he writes based on my last comment, he goes, yes, it's a tasty, cheesy show. He said, yes, it's a tasty, cheesy show. It's a Gouda show. Okay, whatever. I guess it was funny when I read it. Michael, thank you for the LGB. I appreciate that too. And Peter, I'm going to say hi to Peter, who haven't said hi to. All right, so far, we talked about the market going up. The futures are now 105. The S&P is up 3, and the Nasdaq is still down 10. We talked about self-driving cars, and that's coming. We talked about home builder sentiment and student loan forgiveness. I don't think these guys are going to win the case, but honestly, I don't really care. It's not going to affect us much. Don't worry about it. Coming up, we have today's picks and plays. Don't forget to hit the like button, and don't forget to hit the share button. So everybody watching this show right now, hit the like button. Just like it's applause. Come on, it's an applause to me. Hit that like button. Tell all your friends about the show. Let them know it's both entertaining and educational. And please share it on your page or in groups that you feel will enjoy the show. All right. So the question is, will the choppiness continue today? I was afraid Monday night might be a bear market trap, and it's possible. We'll have to see. The only thing is that earnings season is still in full swing, and most of the earnings are doing well. We actually saw AT&T come in strong this morning, so that's also awesome. Tesla was a disappointment, however. The guidance still looked good after Musk said they were in full production. I still think it's a put play. Anyway, the notable earnings today also, again, will be Philip Morris. AT&T came in already. Walmart I haven't seen yet, and all these will happen before the bell. So it may just help boost the market. Next week, we will have some of the best names. I'm looking forward to it. Once again, Make your picks into earnings. Don't buy anything that's less than 10 days before earnings. It's going to be a little rough if you get it too early. I mean, too late. That's just gambling, actually. Meta and Apple are going to be the tell for the rest of the year. I'm afraid Apple's going to sink after this, but hey, it's just a feeling based on my earlier story about the 2019 prices. So watch for it. I'm not sure that Apple's going to be a great play. I think Meta might be a great play. I actually think Meta's going to be going to shock everybody this earnings season. All right, on the crypto scene, crypto is still not moving. I'm just reading the same screen every day. Bitcoin is a little above 19,000 and Ethereum is still about 1,300. I don't even rewrite it. All right, gold and silver aren't moving much either, though. So gold, basically, gold is around 1640 and silver is now about 1850. Like I've been telling you for a while, I buy silver, but right now I think gold is the better play. You could buy an ounce of gold for 1640, throw it in your safe, in your drawer, or whatever you want to put it. Buy the physical gold. Don't put it in your IRA. This is here so that you can use it for the zombie apocalypse. And that way you can use it to trade it for other goods. And that's what I think you should do. There's something called a gold candy bar. Look this up. It's something called gold candy bar. You can break off little pieces of gold, and you can use that to trade. I have a couple of those. I think they're kind of cool. The Treasury bond. So the Treasury bond right now is 4.18%. It looks to me to be steadying above 4. Now, I realize that you guys don't get it, but if you remember, I really want it to happen. I want it to stay above 4 so Wall Street gets used to it. I'm not real happy about it being over 4, but I'm happy that Wall Street will get used to it so the stock market will start to ignore it. The average mortgage loan price is still now a fraction over 7.5%. Oil is about 87 of a barrel, and it's creeping up again, and the average gas price is about 3.83, down 5 cents from yesterday. Don't forget, this is because Biden's stealing more reserves to lower gas prices for the midterm elections. Expect gas to be back in the 5 range shortly after the midterms, no matter which way the midterms go. They'll probably punish us more if the Republicans get in. But either way, the Democrats will definitely forget this will even happen because they're so freaking blind. All right, I want to thank you all for watching Money Chat Now. We are here live every morning at 7:30 on Facebook, Twitter, LinkedIn, and YouTube. And you can also find repeats of the show on Rumble and Spotify. My name again is Larry Steinhouse. I am the host of Money Chat Now, and I am the CEO of Investor Schooling. And remember, you can contact me directly at Contact Larry. That's contactlarry.com. Contactlarry.com. Everybody go there and just take a look at what that looks like because it's kind of cool. You can get all my social media information right there. And of course, everybody, make it a profitable day.